What's going on, guys, and welcome back to another video. So with it being a Monday morning, I want to discuss this week's investing plans and my other thought processes for the week ahead. For this week I want to focus on two main factors, and firstly I want to have a look at my trading 2-on-2 portfolio to see which companies are in the red that I can take advantage of in terms of dollar cost averaging. The second thing I want to look into as well is swing trading that I mentioned in one of my videos last week, and I want to kind of start learning this week and kind of start using a practice account on trading 2-on-2, and then hopefully next week I want to start implementing what I've learned, albeit in small amounts of capital, but it'll definitely be a good start. But just before we dive into those two topics, can I please ask, as always, if you're new around here, to consider subscribing to the channel. We're going to have a goal this week. It probably might be a bit much, but we'll go for it anyway. We'll try to get to 750 subscribers by the end of this week. And with all that being said, let's dive right on into my trading 2-on-2 portfolio. I'll just give a quick context of where I am so far with my trading 2-on-2 portfolio. We have just over €7,000 invested, and as you've seen in any of my other videos, our main goal on this channel is to get to €100,000 invested. So it's kind of nice to see that we're about 7% of the way there at the moment, and hopefully over the next few months we're going to get to at least 10% of that goal. We're currently up about 12% overall, or 12.13%, or that's about €758 profit. My main overall plan in terms of investing this week is mainly to remain cash heavy. However, I will be focusing in on the two stocks that we look into next on my overall portfolio that are currently in the red. So I want to start taking advantage of those as they are down more than 3% each. So I definitely think it's a good idea to start doing so. But in terms of the other 28 companies in my portfolio, I won't be adding any further money into any of these at the moment, because they're all fairly well in the green in my opinion, so I don't really want to affect my dollar cost average. And again, patience is key to long-term investing, so eventually some of them will probably go back into the red, and when they do so, I'll have a big enough cash pile at the ready to take advantage of that. I haven't made an update video since the start of last week. I want to have a very brief look, that is, into each of my companies to see which two are currently in the red that we'll take advantage of next week in terms of investing. So we have, first of all, we have my communication services pie, which is up 20.86%, and both holdings, Walt Disney and Facebook, are both fairly well in the green, with Walt Disney up over 40%, so I'm quite happy with that. In consumer discretionary, we can see we're up 4.13 overall, and all three companies again are back in the green. McDonald's over the last few weeks wasn't a red, but we pumped in about 200 or 300 extra euro, and that has made the difference and brought it back into the green. In consumer staples, we're about up 0.5% overall. Coca-Cola, one of the companies that, like McDonald's, I put a lot more capital into the last few weeks, is back into the green and is up over 2%. PepsiCo is up 3.5%, and P&G will be the first company that we're going to talk about later on in terms of investing more money in this week. It's currently down 2.5%. In my energy sector, all three companies are currently in the green, and we're up 21% overall. So again, I won't be touching any of these this week. In my ETFs, we are up 13 or nearly 14%, should I say, and both Vanguard S&P 500 is up 15% and the Vanguard FTSE 100 is up nearly 8%. Overall as well, financial sector is up 19%, and all five of these are well in the green as well, with a lot of these like JP Morgan, Bank of America and Goldman Sachs all up between 30 and 40% overall, and Visa and MasterCard both up over 4%, so I'm very happy with how that's going at the moment. And again, Visa and MasterCard, just like Coca-Cola and McDonald's earlier, they were both fairly well in the red at the start of last week. So it's kind of nice to see them back up about 7% difference overall. So it's always good to see. And again, that's one of the main reasons on this portfolio, or this overall portfolio, should I say, with 30 companies. The reason I have so many companies is obviously, first of all, for diversification. But second of all, because the more companies you have, the more opportunities overall you would have the dollar cost average. For example, if I only held these 5 companies and nothing else, it'd be very infrequent when I could actually invest more into these stocks because they'd be in the green more times than not. In the healthcare sector, the second company here we'll be investing further into is Pfizer. It's down 4.3%. We only have about €176 invested at the moment, so there's definitely a lot of room here to up the overall capital and bring this company back into the green. AbbVie and Johnson & Johnson are both well in the green as well, so we're not going to touch those. In the industrials, we're up 6.1% overall, with 3M, Caterpillar and Waste Management all in the green. We have no holdings at the moment in materials. In real estate, we just have the one company, Realty Income, up 3.6%. And my main overall sector so far that has the most capital in it is the tech sector. We have €1,357 at the moment. And if we scroll down here, we can see that all 5 holdings are well in the green as well. We have no holdings in the utility sector. So that's the two companies we're going to focus on this week in terms of putting further capital in to improve my dollar cost average. So P&G and Pfizer are the two companies out of my 30 overall that I'm going to invest into this week as well. Again, I won't be putting anything crazy into either of these stocks at the moment, as for example on screen here we only have about €320 invested into P&G, and Pfizer we have less than 200. So as they are both down about 2.5 3.5%, I'm going to put about 50 to €100 into each of these two stocks. The second thing I want to do this week as well, that I mentioned last week, was also swing trade. Now again, you can notice on screen here that there's €5,000 here. However, this isn't the practice account on Trading 2 and 2, as I'm a firm believer of practicing before you actually put your hard-earned capital at stake. Now this week, while I'm learning how to swing trade on this practice account, I want to do 5 different things that I'm going to talk about now. The 5 things I've wrote down earlier, and the first of these is to look into different styles of swing trading. Now there is many different styles that a lot of different people practice, so I'm going to try to kind of handpick the best parts out of each of those. It's easier said than done, I know, but you will over time, once you start practicing, kind of see what style of investing, and especially in terms of swing trading here, best suits the person. The second thing is to make a log of each of my fake swing trades, or practice swing trades should I say, on an Excel. We will see how much I gained or lost within this practice account, and probably you learn a lot more from the times you lost money, even albeit a practice account. But that's the best way to learn, so I'll write down what I did wrong or what I could have done better, which will definitely be of benefit. So the third thing I want to do this week in terms of swing trading is read this book, Swing Trading by Mark Lowe. Now I bought this book a few months back, but due to kind of work and other things coming up, I actually didn't get a chance in reading the book yet. So now is definitely a brilliant chance to do so, and I'm even going to make a video later on in the week, probably Thursday or Friday, on what I've learned this week on swing trading. So hopefully that will be kind of beneficial to anyone that wants to look into it. I also have this big book here from college. There is a small bit of swing trading in the kind of middle of this book, so I might as well have a look through this book since I already have it as well. Fourth task could be quite lengthy, and it's kind of, there'll be a lot of learning in it in my opinion, and that's to both look at the fundamental and technical analysis side of things. And technical analysis is certainly very kind of important in terms of swing trading as well. In my normal style of investing with my 30 companies on blue chip portfolio, it's kind of more of hold and wait until it goes down in value and buy more. And because it's a long-term portfolio, you don't really have to be too price sensitive. Just once it goes into the red is always a good time to cost average. However, when you're swing trading over a few days or a few weeks at the most, getting at the right time and exiting is certainly extremely important. The fifth and final point that I want to focus on this week is to basically practice. Now, I'm starting off with a realistic amount here. In the practice account, you can put in any amount you want. But for example, there's no point in me starting with a practice account of €100,000 when I actually won't have €100,000 to invest. So €5,000 is certainly a lot more realistic, and it'll be a lot easier to gauge how I'm performing in terms of percentages. For example, 1% of 5,000 is a lot less than 1% of 100,000. So it gives you a lot better and more accurate interpretation of how much you can actually make. Now also as well, in terms of practice account, it kind of takes the emotions out of trading, but I want to pretend that this is real live money at risk, as this will definitely alter my perception of investing. Those are the things I want to focus on this week. First of all, trying to get this channel to 750 subscribers. Again, that might be a bit optimistic, but just let's see how we can go. Second of all, I want to invest into P&G and Pfizer, two of the companies out of my overall 30 that are in the red, so it's definitely a great opportunity to dollar cost average. And thirdly, and probably the most interesting of these, is to start swing trading, albeit on a practice account at the start, but it's certainly very good in terms of diversification and also kind of looking into different styles of investing that might better suit the person. So if this video is anyway helpful or entertaining, be much appreciated as always if you consider subscribing to the channel if you're new around here, and if you can like the video as well, it would really help out in terms of the algorithm and it would bring the video out to more people. And finally, the most important thing, if you have any questions, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. Thanks very much as always for watching, and I will see you all in tomorrow's video.